In our last briefing, we identified the 22-year copper deficit and the systematic liquidation of the middle class. Today, we audit the exit doors. If you feel the ground shifting beneath your feet, it isn't a lack of effort. It is the architectural transition from a paper economy to a physical reality. On March 30th, Federal Reserve Chair Jerome Powell explicitly noted that the build-out of AI data centers is now a primary driver of structural inflation. This puts unprecedented pressure on the very materials required for global growth. This confirms our primary thesis. If you aren't positioned in the infrastructure, you are simply funding it. You are the liquidity for a supercycle you don't own. The global order is currently dividing into competing blocks and supply chains. While the West manages legacy debt, the BRICS nations are aggressively expanding their control over global gold reserves, aiming for 70% control by the end of this year. We are entering the unit era, a trade settlement system backed by tangible commodities. In this environment, resilience is the only true currency. Here are the 5 tickers defining the 2026 Physical Truth portfolio. The first mechanism of defense is XME, the S&P Metals and Mining ETF. Most investors think of mining as a legacy industry. They are wrong. XME is the broad-spectrum weapon against fiat devaluation. As central banks navigate energy spikes, XME captures the scarcity premium of the materials the G7 economies are desperate to stockpile. Since the start of the year, institutional flows into mining have outpaced tech growth sectors for the first time in a decade. The mechanism is simple. Mining companies have spent the last 5 years cleaning their balance sheets. They are now lean, high-margin machines that pay significant dividends while the underlying commodity prices skyrocket. When inflation hits 12%, a tech company's costs go up. A mining company's revenue goes up. For your micro execution, do not just buy the ticker and watch the line. Audit the top 3 holdings within XME, specifically focusing on steel and aluminum producers. Look for companies with a debt-to-equity ratio below 0.5. Position your capital where the atoms are mined, not where the pixels are sold. Moving to the power layer, we look at URA, the Global Uranium ETF. AI data centers aren't just hungry for data. They are starving for constant, carbon-neutral power. As tech giants like Amazon and Google scramble to secure nuclear energy contracts, the spot price of uranium has become a proxy for AI's survival. While the masses argue about policy, the architects are owning the fuel. We are facing a structural supply deficit that cannot be fixed by printing money. You cannot print a nuclear reactor, and you cannot print refined yellow cake. With supply deficits projected through 2030, URA represents the ultimate energy sovereignty play. It is the bridge between the digital future and the physical power required to run it. For your micro execution, track the Sprott Physical Uranium Trust. If the trust is trading at a discount to its net asset value, that is your entry signal. Institutional money uses this discount as a liquidity door. You should do the same. The third pillar is CPER, the Copper Trust. We are currently facing a structural shortfall of 300,000 metric tons. Copper is the conductivity king. Each new hyperscale data center requires up to 50,000 tons of high-grade copper cabling and cooling infrastructure. This isn't a speculative trade. It's a structural necessity. Copper is the heartbeat of the modern world. From the electric vehicle sitting in your driveway to the subsea cables carrying this very video, copper is the non-negotiable substrate. In a world of digital bits, the winner is the one who owns the copper atoms that move them. When the supply-demand curve crosses the scarcity threshold, price discovery becomes violent. For your micro execution, go to the International Copper Study Group website. Audit their monthly refined copper balance report. If the deficit widens for 3 consecutive months, you are in a confirmed supercycle. This is your signal to increase your weighting in CPER. As terrestrial resources become a geopolitical battlefield, we look upward to ARKX, Space Exploration and Innovation. This is the frontier play for the 2026 economy. ARKX moves your capital from the limitations of earthbound debt into the expansion of orbital infrastructure. Space is no longer a luxury for billionaires. It is the critical infrastructure for 2026. Global internet, GPS precision for autonomous logistics, and orbital resource mapping are the new high ground. ARKX doesn't just buy rockets. It buys the companies providing the data layers that the physical economy relies on to function. It represents the aspiration of a generation that refuses to be grounded by a failing system. For your micro execution, focus on the satellite communications subsector within the ETF. As 6G technology rolls out in late 2026, the companies owning the low Earth orbit constellations will become the new gatekeepers of global data. Finally, we address the ultimate hedge, GDX, the Van Eck Gold Miners ETF. When trust in the paper economy fractures, capital retreats to the oldest form of truth. But as architects, we don't just hold the metal, we own the producers. With BRICS central banks aggressively purchasing gold to back their new settlement mechanisms, the miners provide the leverage that physical gold cannot. Gold miners are currently trading at historical lows relative to the price of gold itself. This value gap is the opportunity. As gold breaks through new all-time highs in 2026, the profit margins of the miners expand exponentially. GDX offers a real yield in an environment where cash is being liquidated by a 12% hidden tax. For your micro execution, use the gold to silver ratio as your macro compass. If the ratio is above 80, you overweight GDX. If it drops below 60, you rotate into the producers of industrial metals. This is how you manage a portfolio like a sovereign entity, not a retail gambler. These 5 tickers aren't stocks. They are the mechanisms of the new architecture. Whether you are 25 and building a legacy, or 50 and protecting one, the goal is the same. Move from the user class to the owner class. The global order is dividing into competing blocks and supply chains. In this environment, resilience is the only true currency. The March 31st deadline is tomorrow. This is the moment you audit your portfolio for zombies. Are you holding the paper promises of a system in retreat? Or are you holding the atoms of a world being rebuilt? In our next session, we will perform a deep dive technical analysis of ticker number 1, breaking down the exact entry points for the metals and mining pivot. Subscribe to join the Architect class. Information is the fuel, but execution is the takeaway. Stop being the liquidity. Become the architect. I'll see you in the audit.